Hi, and good morning. Welcome again to another edition of today's market analysis for today, February 24th, 2023. I'm Giovanni Betancourt, analyst, trader, and operator with Vantage Markets. Well, expect to see the market move today in response to the Fed's preferred inflation gauge, personal consumption expenditures, PCE, which will be released in about 5 minutes from the moment I'm recording this. Economists surveyed expect to see a rise of 0.5% in January from the prior month, which will be the highest leap since the middle of last year. The Fed has to take today's data alongside the resilient job market and robust consumer spending into account in deciding the right dosage for its next interest rate hikes. Dictating the direction of the American economy is a tough gig. Even the most savvy of financial veterans can know for sure where levers trigger, what outcomes, and with the US economy at stake, there's a lot of pressure to make the right call. All that's to say is no surprise that we are seeing conflicting views among the Fed officials on the next steps. In the Fed minutes release this week, the central bank's own economists have started to sound the alarm on a recession. Other warnings, officials said inflation is not going away anytime soon. They said the staff still viewed the possibility of a recession sometime this year as a plausible alternative to the baseline, the minutes read. In November, the same experts said odds were roughly equal to a coin toss regarding whether the US economy will tip into a downturn. But now, the economists are also highlighting the ballooning pressure on asset prices. Currently, S&P 500 companies remain overvalued. In their words, the forward price to earnings ratio for S&P 500 firms remained above its median value despite the decline in equity prices over the past year. Jerome Powell, for his part, has insisted that the Fed's 2% inflation target is set in stone, but that dogmatism could cause a lot of pain for Americans and the economy. For the central bank to reach that inflation goal, it will need to create a deep recession and more than double the unemployment rate, according to a recent paper from the Cleveland Fed. The authors of the report see inflation hovering over 2.75% by the end of 2025. Based on their models, they added that the unemployment rate will have to climb. I repeat that unemployment rate will have to climb to 7.4%. 7.4% for 1 year if the 2% inflation target is to be achieved. And the jobless rate today stands at 3.4%. Yikes. That's a lot of people unemployed. So what can we expect on the markets today? Well, in front of us we have the Nasdaq. Yep, yesterday we saw a very flat day. We opened up right where we closed yesterday, and we opened to the downside. How much pressure to the downside will we see? Initially, 12,000 is the support, the psychological support. I placed my support a bit lower than that, 11,800, just in case that number is worse than they expected. If it is worse than they expected, yeah, we could probably most likely see a decline in the indices. S&P, I have a 3,900 down here. The Dow, 32,500. Crude oil, I'm bullish on crude oil, but the dollar index, indeed, the dollar strength is actually stopping that continuation of upward movement in the crude oil market. Nat gas ranging right in the center of this channel or this range. It most likely, I assume it's going to continue to stay there for the rest of the day. Then we have gold looking to reach 1800. That most likely will happen. 1800, we are $16 away from some selling gold. Uh, Silver, I'm selling silver. My target is 2050. I'm selling copper. Initially, that $4 is the support for it, but once breached, looking 390 to be my target. I am selling it. And then we have Bitcoin. I'm out of it. I think it's gonna continue to do just exactly the same as it has been doing the past 2 days. Just just, just consolidating right there at that stage, at that level. The euro 105 is right now. I'm looking at it. It most likely will come down to 105 flattish. So be sure on that. The pound as well, 119, because the dollar index is rallying. So reaching 105, we'll see a lot of that downward pressure applied on the equities, on crude oil, on gold, on metals and on the currencies. But if it continues to, if it drops, then we'll see a nice little rally on those assets. But as I'm looking at it, 105 right now is that psychological level. Will it come towards it and then find that resistance here, or will it trade above it? So that's what I'm thinking is going to do. It's going to trade above it. So those are my levels for today. And let's see what will happen. Numbers coming out right now. All right, see you. Have a nice weekend.